Joining us now is Mark Livingstone, and Mark is the president of Cornerstone Financial. Great to have you with us, Mark.
Thank you, my friend. Good to be here.
Now,
good to be on the phone with you, at least.
It is fabulous. Now, you know, many of our listeners know that along with being a mortgage financial guru, that you're also a volunteer fireman. And so many times when you come on our show, you've come just from being up all night at the firehouse. Tell us.
Last night is no exception, my friend. I just got off duty about 40 minutes ago, working my 12-hour shift that I do once a week. And I got to tell you, we got a lot of rain up here, and it was just a very busy night. So I've taken off my fire hat and putting on the mortgage hat for you and the listeners. But it's a quite exciting life, I got to tell you. We were very busy with all the rain. Unfortunately, I don't know if you had heard the news. Someone lost their life flat yesterday up at Great Falls in Virginia, and it was our department that was working that and facilitating the recovery. And where the news and press release and everything came from last night was our station, the Cabin John Park Volunteer Fire Department.
No kidding. So what happened?
She was out. Unfortunately, a 24-year-old was out with some friends on the river, riding the rapids, and she fell overboard and became dislodged. And they called 911 at about 4 o'clock yesterday afternoon. And at 6:15 yesterday evening, it went into a recovery, and she was recovered around 8 o'clock last night. And it's very unfortunate, and my thoughts and prayers go out to her friends and family.
Oh, that's so awful. And, you know, people don't realize that when this stuff happens that the fire department gets involved. You think, oh, yeah, they're going to call, other types of first responders, but it's the firemen that get involved, right?
That is correct. Now, the firemen that get involved are trained specifically in the river rescues. So we have the strike teams that go out when somebody is on the river or on the Billy Goat Trail, and those. I am not one of those, John. I am an EMT and a firefighter, but I'm not equipped to go out on the river in the boats, to do the rescues. So what happened was we got a call that the volunteers had to go in mid-afternoon because the career guys for the county were out on the river. So I went in extra early and staffed the apparatus while they were doing the rescue down on the river.
Okay, interesting. And you know what? There are so many, Mark, so many volunteer firemen, people that are not involved in it, they just don't realize the tremendous commitment that you all have to make at that, right?
That is absolutely correct. In fact, if I had to do it again, I probably would not do it because of the time constraints. Because you have to understand that we are trained not only as EMTs and firefighters, which is extremely time-consuming when you're working a full-time job, but you also have all the other, CPR recertification every year, the radio classes, everything that goes along with being a volunteer, so that you can work right alongside the career firefighters in the specific county where you are a volunteer.
It's not for the squeamish, I can say that. Common Sense News Time coming up on 7:48. This is the John Fredericks Show in Virginia. We're with Mark Livingstone. He's the president and owner of Cornerstone First Financial. Mark, I want to get to the state right now of the mortgage market. Interest rates starting to inch up a little bit. Give us an overview.
Well, what's going on, John, is that, yes, as we know yesterday, the market hit an all-time high. The Dow's doing incredible. And so with that and the rumors that the Fed is going to stop buying the mortgage-backed securities, interest rates have started to inch up. We're talking from, I saw about 3 3/8 on a 30-year fixed 2 weeks ago, and now we're all the way up at about 4.5%. This is the largest increase that we have had since early 2009, where they have just spiked up. Now, the old adage is they go up like a rocket and come down like a parachute. So it would be nice that we're going to hopefully see some relief, John. Mm-hmm. But, when you look at the overall picture of where the rates are right now, they're actually, historically speaking, very low, very low. So those that are on the fence and thinking about refinancing that have been waiting, procrastinating, I should say, or waiting for the rates to come down further, I think that now is the time to act. Okay, a 30-year fixed, 4.5%. Historically speaking, that's not bad. What we are seeing a lot of, John, is people who are, looking to get in to buy their first homes.
Right.
Home buyers are just coming out in droves, and right now it is definitely a seller's market. We're seeing a lot of appreciation right here in D.C., where I am. It's about 15%. Whereas nationally, the appreciation level is up 8% from last year. I'm not sure about pockets. Richmond, Virginia, I'm not 100% sure, but nationally, like I said, it's about 8%. So what is happening is that those people that didn't qualify to refinance previously because they didn't have enough equity and they didn't qualify for the HARP program, which is the Housing Affordability Refinance Program for those with Fannie Mae or Freddie Mac loans. Well, those people that didn't qualify for that program now should try, because the homes are appreciating. So therefore, if they didn't qualify before because of lack of equity, now might be the good time to get in and try. So we have that going on, as well as the purchasers coming out. It's a seller's market right now because there's not a ton of inventory. Interest rates historically, like I said, are pretty low right now. So if someone is thinking about buying a home, now is a great opportunity to at least make sure your ducks are in a row, get pre-qualified, to make sure that your credit is where it needs to be, make sure you have the down payment that you need to have. So it's a very active market right now. It's actually very exciting.
Yeah, it is exciting, and I think I'm intrigued by what you said earlier. There was so many of us that wanted to refi, take advantage of the lower rate, but the home was underwater, and so you're not able to do that. But now it has gone up 10, 12, 15%. You might be just on the edge, and that could make a huge difference in your mortgage payment. Hey, I want to tell my listeners, if you want to get more information, just kind of run the numbers, no obligation at all. You can call Mark, 866-625-1221, 866-625-1221. That's 866-625-1221. Mark, tell us about the IRRRLS program. Boy, that's a lot of R's.
Yes, it is. It's that is for the veterans loans, the VA loans. So if somebody already has a VA loan, it's the interest rate reduction refinance loan. And this is something that the VA came out with, John, for those people that didn't have the Fannie Mae, Freddie Mac loans, so that they could take advantage of these low rates, even if they're underwater. The VA IRRRLS Program allows those with VA loans to refinance with no appraisal whatsoever. So even if their house is completely underwater, which means that they owe $200,000 and the house is only worth $100,000, it doesn't matter because you don't need an appraisal. So the VA IRRRLS completely does away with the appraisal requirements as long as the homeowner has a 640 credit score, and as long as they have not been late on the mortgage in the past 12 months. They can take advantage of this wonderful, wonderful program. And the rate on the VA IRRRLS today is only 4.25%. And a lot of these VA loans are standing up around 5-6%. So when you're talking no appraisal requirement, refinance down to 4.25%, you could be talking, based on your loan amount, hundreds of dollars per month in savings.
This could make a real difference. It's called the VA IRRRLS Program. Again, if you want more information, just call Mark Livingstone. He's with us right now, 866-625-1221, 866-625-1221. And why this is so interesting is what you just said. If you got a VA loan right now, even if your house is underwater, and you say, well, I just can't refinance that because there's no equity in it, no appraisal needed. It's just a matter of picking up the phone, making the call, and putting yourself in a position to save hundreds of dollars a month, right?
That is correct, yes. And the other program that we were talking about, John, is the HARP program, the Housing Affordability Refinance Program. And a recent survey just came out, I think it was probably about 2-3 weeks ago, that said only 52% of the people that qualify for this program, the HARP, have taken advantage of it. Why the other 48% haven't, I don't know if it's because they haven't heard about it. I don't know what the reason is, but actually Fannie Mae and Freddie Mac are putting millions of dollars into an advertising campaign to make homeowners more aware of this program that's been out since 2009 because so many homeowners haven't taken advantage of it and can take advantage of these low rates.
Well,
that's the Housing Affordability Refinance Program. If your loan is Fannie Mae or Freddie Mac, which if you go on our website, you can look up your own loan, and that's cornerstonefirst.com. And if you qualify for that program, the HARP program, then you can take advantage of these low interest rates as well.
Yeah, I tell you what, it makes a lot of sense. And the reason the government is advertising these is just what you said, Mark. Basically, people don't understand it. They haven't taken advantage of it. Again, just go to cornerstonefirst.com or give Mark Livingstone a jingle, 866-625-1221, 866-625-1221, and he'll be able to very quickly walk you through what's going on and give you a no obligation assessment of your situation. It's all about saving money. And the thing about paying interest is you get no value out of it. I mean, it just goes out the door, and there's no value based with that. 866-625-1221. Also, Mark, we got a couple more minutes. Explain to us your reverse mortgage loan program. How does that work?
Well, the reverse mortgage, John, I like to say it's not for everybody, but it definitely has made many of my customers a little more comfortable and gotten them out of a position that they should not have been in. So, for example, if you're 62 years or older and you have some equity in your home, a reverse mortgage allows that senior to never again have a mortgage payment. And if there's enough equity in the home, then what they can do is take cash out. So a reverse mortgage allows a senior to take the equity out of the home, and they still live in it, and don't have to pay it back as long as they live in the home. It does not mean that the bank takes over the house, and that's
right.
The big misnomer that a lot of seniors have. A lot of times I will, do the counseling for the reverse mortgage, and the kids get involved, and they go, well, this is our inheritance. We don't want our parents to have a reverse mortgage. I'm like, no. That's not how it works. The bank never takes the home. What it is the senior stays in the home, the mortgage is paid off by the new lender, and then if there's enough equity, they can get what's called a 10-year payment. 10-year as in getting monthly payments, or they can get a lump sum, which is what the majority of my customers do, John, because they either want the money to pay back property taxes, or maybe some, put in a savings account, or maybe for their grandson's education. But what they do is they get that money, and it's not paid back until if they pass away or they move out for 12 months or more. So therefore, the kids have the opportunity to either sell the home and pay off the proceeds from the reverse mortgage, or to refinance the home and put their names back on it and then keep the house. So that is the big misconception about the reverse mortgage, is that the bank is going to own the home. The bank never owns the home. The senior always stays on the title and the deed and the loan, and it's a great opportunity, like I said, for those seniors that maybe don't have enough income or aren't living their golden years the way that they should. The reverse mortgage takes care of all of that for them. And again, there's information about the reverse mortgage, John, on our website at cornerstonefirst.com.
Okay, Mark Livingstone, the president and owner of Cornerstone First Financial, also a sponsor of the John Fredericks Show. Hey, if you like our show, we're only on the air because of our loyal sponsors like Mark Livingstone. Give him a call, 866-625-1221, 866-625-1221. Also, you can go to cornerstonefirst.com, cornerstonefirst.com. Hey, Mark, we're out of time. We want to thank you for joining us today and for your tremendous insight. Thank you, man.
Hey, it's my pleasure. Good talking to you, my friend. I'll talk to you in a couple weeks, okay, John?
All right, buddy.